Hello and welcome to The Account, a podcast about how we fund the sustainable future that everyone, I think, now knows that we really need. I'm Richard Murphy, a professor of accounting practice at Sheffield University Management School and an economic justice campaigner. I'm also the author of the Funding the Future blog, to which the content on this podcast is pretty intimately related. There's more information at the end of this podcast on where you can find that blog and other places where I publish my ideas. That, though, can wait for a moment. I now want to talk about the key issue that this edition of The Account is all about. I want to talk about tax. There's nothing very unusual about me doing that. As a chartered accountant, I've been doing it for the last 40 years or so. What I realise as a result is that the vast majority of people really have very little understanding of what tax is. And that is despite the fact that almost all of us spend more on paying tax than we do on anything else in life. That fact alone makes it staggering to me that so few people understand what tax really is, or what it does. For example, I suspect that 98% of people think that tax pays for government services, but it doesn't. Not one penny of the tax paid in the UK to our government in Westminster is used to pay for government spending. Instead, every single penny that the UK government spends is paid for with money that the government borrows all day and every day from the Bank of England, which is the bank that it owns. The government can spend whatever it likes because it has its own bank. What is most especially true is that it never has to wait for taxes to come in before it can spend, because all the money that it wants is available to it whenever it wishes, simply by asking its own bank to make it available. So, why do we tax in that case? Well, firstly, because the government has to control inflation. And of course, it could not spend the amount of money it creates every day without inflation very quickly going out of control. So the government taxes to reclaim the money that the Bank of England has already created for it so that it might spend. And by doing so, it controls inflation. In my opinion, this is the first and most important reason why any government taxes. Secondly, a government taxes people because it wants us to use the money that it has created in our routine transactions in the economy. We do that if we have to pay significant amounts of our income in tax, because we cannot afford to take the risk of doing anything else when tax has to be paid by law in the currency that the government creates, which is the pound sterling in the UK. As a result, the government gets control of money in our macroeconomy, and as a result, it gets quite a lot of control of that economy as well, which is, of course, exactly what it wants. But in addition to these two reasons for taxing, the government also taxes to deliver its economic and social purposes. So it uses tax to redistribute income and wealth. It also uses tax to reprice goods and services, including the likes of alcohol, carbon and tobacco, the price of which it increases, whilst it reduces the price of health, education, food and children's clothing, for example, by using tax. The government also uses tax to reorganise the economy. It provides subsidies to businesses who are doing things that it wants to happen, and it removes those subsidies from those activities that it does not want to flourish. Finally, the government taxes because they know that people who pay tax are more likely to vote. Tax is what I call the consideration in the social contract between us and our government. And people want a say on that contract precisely because they do pay tax. Tax is then the mechanism that we use to hold the government to account, and which in turn makes it accountable to us. Now, for all those reasons, tax is incredibly important. But despite that, it does not do the one thing that most people think it does. It does not pay for our public services. And as a result, I have another myth to shatter. There is no such thing as taxpayers' money. However often our politicians like to talk about taxpayers' money, nothing changes the fact that we don't pay for the benefits we get from government spending, which is instead funded by the Bank of England. We pay tax to control the inflation that would result from that process of money creation. Tax is then only charged to destroy the money that the Bank of England creates to let the government spend day in and day out. Any politician who says otherwise is either revealing their ignorance or is spreading a convenient myth which they know to be untrue. It's time our politicians told the truth about tax. It's time we understood tax. It's time we realised that tax is the most amazingly powerful instrument to control inflation, but most of all, it is the most amazingly powerful instrument to shape the society that we want to live in. But tax isn't necessary to let the government spend, because its own bank provides the money for the government to do that. Thanks for listening. I hope you enjoyed this edition of The Account. If you did, there's more on the themes addressed here on the Funding the Future blog. You can find that by searching for my name, Richard Murphy, on Google, and I should come out top of any search. Just follow the links to the blog from there. You can also find me on Twitter at Richard J. Murphy and on YouTube, also at Richard J. Murphy. If you like what I'm doing, you can donate to my work by clicking on the Buy Me a Coffee logo on my blog, and I hope to talk to you again soon in another edition of The Account, where we talk about the sustainable future that all of us here on Earth need to share in.